let's start with our presentation. So, this old Filipino saying, kung may tinanim, may aanihin, is somewhat related to our topic for today. So, in English, it can be translated as, if something is planted, something will be harvested. So, if it is not obvious yet today, we will be discussing the substantive audit procedures typically performed. Sorry, wait lang. Ayaw nang mag-change ngayon ng prepaid expenses and other assets. So prepaid expenses and other assets are similar to the old Filipino saying because both include current actions and future consequences. So welcome to this training session where we will discuss how to audit prepaid expenses and other assets through the performance of substantive testing procedures. I would like to emphasize that this training for prepaid expenses and other assets substantive testing procedures only and assumes that no test of controls were performed by the audit team. Tests of controls and their impact on substantive testing will be discussed in other training sessions. And similar to what we did for investments last week, we will also divide this training session into two phases. Phase 1 will cover the audit of prepaid expenses, while phase 2 will cover the audit of other assets. So what are our training objectives for this session? At the end of this training, I hope that you will have gained a basic understanding of prepaid expenses and other assets, learned about some of the common risks related to prepaid expenses and other assets, learned the principal audit objectives in auditing prepaid expenses and other assets, and finally, learned about the substantive audit procedures typically performed on prepaid expenses and other assets. So this training session will be conducted in the same order as this training objective. So we will start with the basic understanding and then the common risks, principal audit objectives, and then finally we will tackle the typical substantive audit procedures being performed on prepaid expenses and other assets. Before we dive into the discussion of the substantive audit procedures, let's review first what prepayments are, or what are prepaid expenses, otherwise known as prepaid expenses. So prepaid expenses are expenses not yet incurred but already paid in cash. So remember this, they should have been paid in cash. They are initially recorded as assets and subsequently charged to profit or loss as they are consumed in the operations or expire over time. A common example of prepaid expense is insurance premiums for property, fire, car, etc. So any insurance, any prepaid insurance, any insurance that are paid in advance, that's a prepaid, that can be considered as prepayment. Another common example of a prepaid insurance are prepaid rents. So any rent paid in advance is considered a prepayment as well. An annual magazine subscription is also usually paid upfront and therefore qualifies also as prepayment. In other words, any payment made in advance for a future expense is considered a prepaid expense. Pag hindi mo binayaran, hindi siya prepaid. And hindi siya pwedeng maging prepaid. If it's unpaid, then it cannot be a prepaid expense because of yung keyword na paid. It should be paid. Prepaid expenses are classified as current if their future economic benefits are expected to flow to the company within 1 year or the normal operating cycle of the business. So it's either 1 year, or if the operating cycle of the business is more than 1 year, let's say 12 months, then, 14 months, let's say, if that's the normal operating cycle of the business, then considered pa rin siya as prepaid as long as within that normal operating cycle siya. Otherwise, they are classified as non-current on the statement of financial position. Prepaid expenses are generally not material in amount compared to other account balances on the financial statements. Although this is not always true, but in general, they are not large in amounts. The associated inherent risks related to prepaid expenses are most of the time deemed low, which makes the risk in auditing prepaid expenses not too many. This does not mean, however, that prepaid expenses are always to be considered as insignificant amount or insignificant account. Note that although prepaid expenses are typically not as significant in amount as compared to other accounts in the financial statements, they may still have significant balances that could still impact the overall fairness of the financial statements had they been misstated. So, kahit na hindi siya mabilis move or hindi masyadong malaki yung amounts niya in general, typically, they can still misstate the financial statements. So let's move on to the, unless you have questions about prepaid expenses, we'll move on to the common risks related to this account. Although prepaid expenses are often regarded as low-risk assets, there are still risks associated with them. Please note, however, that the common risks we will briefly be discussing are not exhaustive. Other risks associated with prepaid expenses can exist, which will not be discussed today. We will only go through 3 of these common risks. The first risk is charges recognized in the books as assets are not valid. The second common risk that we will discuss is expenses that should be considered as assets as at the cutoff date are not considered as such. And the third risk is purchases of the related assets such as prepaid insurance is not properly authorized. So let's begin with the first one. Charges recognized in the books as assets are not valid. As we have discussed earlier, prepaid expenses are future expenses paid in advance. They are initially recorded as assets and subsequently charged to profit or loss as they are consumed in the operations or expire over time. The accounting treatment for some expenses paid in advance is quite easy to determine and test. Let's take, for example, insurance premium that is paid in advance. It is easy to know the period covered by the premium paid by looking at the policy. So, tingnan lang natin yung policy, we'll see the coverage na kaagad of the insurance. Accordingly, it would be easy to test how much the prepaid insurance should remain as of, say, the end of the year. The same is true with office rent, yung mga space rentals, because usually fixed amount yan, so we can easily do recalculations to test yung prepaid portion of the accounts. But there are certain expenses that may not be as straightforward as rental fees and insurance expense. One expense that has commonly become a source of possible misstatement in prepaid expenses is advertising costs. So when we see advertising costs, be careful with that account. As we all know, advertising cost pertains to the amount incurred by a company to promote itself, its products or brand through the use of different mediums such as internet, magazines, billboards, television, radios, publications, etc. While most agree that advertising costs should be expenses incurred and paid, some quarters believe and some even insist that advertising costs should be capitalized and recorded as an asset subject to amortization since the effect or benefit of advertising can be felt by the company, not at the time of payment, but in the future still. Accordingly, some companies, especially those that incur quite a substantial amount of advertising costs, try to record such expenses as prepaid expenses, even though the ads had been run already, since they claim that the benefit of the advertising will still be in the future. This is something na uh, naging cause ng delay ng isang client ko before, because they keep on insisting na dapat prepaid i-recognize yung advertising cost na incur nila, because nga daw yung benefit pa naman nung kasi tinelevise nila, they bought some television ad spaces. Ang sinasabi nila, hindi naman nila mafe-feel kaagad yung benefit from the advertisements until sa future pa raw. So, yun yung matagal na naging contention yan between the auditing firm, yung auditing firm ko before, and the client. However, aside from the reason that it would be hard to measure the future benefit of advertising, Philippine Accounting Standard or PAS 38 on intangibles also stated that expenditures on advertising and promotional activities, including mail order catalog, should be expensed when incurred. So, by default, advertising costs should be expensed as incurred. Therefore, advertising costs must be recorded in profit or loss at the time the advertisement is run or when the advertising costs are incurred. But does this mean that advertising cost paid can never be recognized as a prepaid cost ever? Talaga bang hindi na siya pwedeng? Because PAS 38 said that dapat ang advertising cost should be recognized when incurred. Hindi na pwedeng maging prepaid ang advertising cost? The answer is no. Prepaid advertising costs can still be recognized, but only when the benefit can be clearly identified to still be in the future. For example, if the company buys an advertising spot on a television program that will run after the end of the year but is already paid for by the company. In this instance, since the ads will still run in the future, it may be justifiable for the company to claim that the occurrence of the expense will still be in the future, and therefore the upfront payment of advertising costs can be recognized as a prepaid expense at the end of the current year. So kasi this is a different case. Ito kasi nagbayad na sila pero hindi pa iraran yung advertisement. It will still be run or ipapalabas pa lang siya in the future. So in that case, pwede siyang i-consider as prepaid expense. So another common risk associated to prepaid expense is that expenses that should be considered as assets as at the cutoff date are not considered as such. In contrast to what we just discussed, which relate to an overstatement of prepaid expenses, this next common risk pertains to an understatement of the account whereby the prepaid expense amount or the prepaid portion of the expense payments made by the company are all charged to operations instead of recognizing the prepaid portion as an asset on the statement of financial position. This type of misstatement in prepaid assets occurs when management tries to, for example, minimize the taxes due from it. Please note, however, that management could have other motives in trying to increase its expenses. We as auditors should be alert for such motives. So importante lagi na we consider yung motivation ng mga kliyente natin. But of course, misstatement in prepayments could also just be a result of an error in recording the expenses paid in advance, meaning the misstatement was unintentional and resulted only from weak internal controls of the company, especially over financial reporting and financial close process. So hindi naman lahat ng misstatement in prepaid expenses are intentional. some are talagang error lang because of for some other reasons. Finally, the last common risk that we will discuss is that purchases of the related assets, such as prepaid insurance, are not properly authorized. So much like with other transactions, auditors should ascertain that the transactions relating to prepaid expenses are properly authorized. Importante yung authorization. For example, a purchased insurance policy that was recorded in the books may not have been properly sanctioned by the authorized officers of the company. Accordingly, we should also check for these authorizations when testing prepaid insurance, especially those very significant ones. Um, may mga companies kasi na very large yung kinukuha nilang mga insurance policies. So, for example, kung kunwari health care nung employees, health insurance ng employees, so malaking amount ang kailangang i-disburse for that. In those cases, usually kailangan ng board approval doon or top management approval. So therefore, we should always check for those authorizations. Kasi for all we know, may mga activities na ginagawa yung company that might not have been sanctioned by the top management. So those are the 3 common risks that are associated to prepayments. Let's now move on to the audit objectives. So there are 5 principal objectives in auditing prepaid expenses, and these are those objectives. We will discuss each one briefly. The first audit objective is to ascertain that all prepaid expenses on the balance sheet represent expenditures that will benefit the succeeding period. By the way, before we move on to the discussion of these audit objectives, I would just like to point out the reason why we are discussing the audit objectives. Why do we have to know the audit objectives? As auditors, dapat before you go to the client, you know already what your objectives are. Kasi if you have no target, you have no objective, wala kang aim, hindi mo alam kung ano talagang purpose mo sa pagpunta sa kliyente or even sa pag-audit mismo, you will get lost along the way. And that is something na we try to avoid because it could reflect on us then as auditors kasi most likely magiging inefficient yung audit. So going back to this first audit objective, as I've said earlier, only expenses that have been paid in advance but whose benefit will still inure to the future should be recognized as prepaid expenses. Any other valid expenses incurred and paid for by the company should be charged to profit or loss. In this regard, our audit procedure should be tailored to achieve this audit objective. The second audit objective that we will discuss is something that addresses completeness and the cut-off assertions. And this is that all expenditures that will benefit the succeeding period and that can be properly included in prepaid expenses at the balance sheet date are included on the balance sheet. So dapat kumpleto. Some companies may erroneously or intentionally either charge the prepaid portion of expenses to profit or loss during the period, thus overstating expenses and understating the total assets in the current period. Some companies may also either intentionally or erroneously charge the prepaid portion of expenses on the current period to future periods, resulting naman in the understatement of total assets in the current period and overstatement of expenses in the future period. Again, the audit procedures that will be performed on prepayments should be able to ensure that all material expenses that will still benefit the future are recorded as prepaid expenses on the statement of financial position. The third principal audit objective, which our audit procedure should be able to achieve, is ascertaining that prepaid expenses are included on the balance sheet at the appropriate amounts. These include this audit objective addresses the measurement and valuation assertion. The fourth principal audit objective in auditing prepaid expenses addresses the assertion, rights, and obligation. And this is to ascertain that the entity is entitled at the balance sheet date to the future benefits related to the prepaid expenses included on the balance sheet. This means that the audit procedure that would be tailored for the company should be able to ensure that not only valid expenses of the company have been paid in advance are recorded as assets of the company. In other words, expenses of other entities, for example, of a related party, should not form part of the prepaid expenses account of the company. So only valid prepaid expenses should be recognized in the company's books. The final audit objective in auditing prepaid expenses is to ascertain that prepaid expenses are properly classified, described, and disclosed in the financial statements, including notes in conformity with the prescribed accounting principles. This audit objective addresses the presentation and disclosure assertion. Accordingly, the audit procedures that will be performed on the account should be able to ensure that the recorded prepaid expenses are clearly described, classified properly as to current and non-current, and all relevant disclosures are made in the financial statement. So to sum up the audit objectives, at the end of our audit of prepaid expenses, we should be able to ascertain whether the prepaid expenses exist, completely recorded, really owned by the entity, and properly described, classified, and disclosed in the financial statements. So all the next audit procedures that we will be discussing are meant to meet the audit objectives we just discussed. Please note that not all audit procedures relating to prepaid expenses will be covered in this training. Only the common procedures will be discussed. This is because, as I have mentioned in previous training sessions, substantive audit procedures are not the same for all clients. So, kasi dapat ang substantive audit procedures are customized for each of our clients. And I think somebody asked me a question over this earlier. Like, ang sinasabi niya, what is the effective substantive procedure on other assets? We will discuss that later. But what I'm saying right now is not all of these audit procedures that we are going to discuss will need to be performed on your particular client. Pwedeng lahat you will need to perform. Pwede namang some of these procedures will only need to be performed, or pwede rin additional procedures that we will not discuss here may need to be performed on your client. Depende yon sa circumstances ng clients ninyo. I would like to reiterate, as we have discussed before in other training sessions, that every audit engagement should have an audit program. An audit program is something like this. This is just the top, actually. This is not the whole audit program. An audit program, for those not familiar with this term, is a list of audit procedures that need to be performed by the audit team for the proper execution of the audit. Every audit program should be customized, as I have said, on the results of the procedures, such as the risk assessment and understanding the business that we typically perform during the planning phase of the audit. That being said, let us now learn together the typical substantive audit procedures performed on prepaid expenses. Please note that we are only going to discuss the 4 primary procedures that for prepaid expenses, and for prepaid expenses, we are only going to discuss the 4 primary substantive audit procedures in the audit of the account. So let's discuss briefly each of these procedures. The first one is prepare a lead schedule and compare account balances with those prior periods and investigate any unexpected changes or absence of expected changes. Auditing prepaid expenses are generally pretty straightforward. Similar to the audit of other accounts, you will notice that the first step is to prepare the lead schedule for the account and an analytic review activity. This is because performing analytic reviews can give an auditor an idea of possible issues, not only on the account being reviewed, but possibly on other accounts as well. For example, when an auditor sees an unusual change in the prepaid expense account that can't be reasonably explained, additional effort may need to be exerted or additional audit procedures may need to be performed by the auditor to find out the reason for the unusual change. Again, similar to other accounts, this first analytic review is meant to be corroborative, evidence only, and is not being used as a primary procedure to validate the prepaid expenses account balance. When reviewing or comparing prepaid expense account balance between this year and the prior year, take note of the large balances or inexistent balance when one is expected, and other unusual items which may need to be focused on during the audit. For example, if we are aware that one of the debt covenants requires our recurring client to keep all the collateralized equipment insured at all times, and yet it appeared based on the analytic review that there was no apparent renewal of the insurance policy from the prior year, which we know based on our prior year audit that the policy ended, say, at the end of the middle of the current year, then we should further investigate this matter as this can indicate non-compliance with debt covenants. The absence of prepaid insurance could also indicate possible erroneous recording of insurance expense from the renewed policy. For example, the company may have charged all the premiums to the current year instead of recognizing the prepaid portion of the insurance that pertains to the following year. The next audit step is to obtain a schedule or breakdown of the prepaid expenses balance. When we request our clients for schedules of prepaid expense account, please ensure to request them to put also all the necessary information we need to facilitate our verification. Here's a good example of a schedule of prepaid expenses. So make sure when you ask for a schedule of prepaid expenses, ask the client as much as possible with this format. So this format is based on an actual prepaid expenses schedule provided to an audit engagement team. Note that the schedule showed the nature of each prepaid expense account, the reference number for the document subject for inspection, the original amount paid for the prepaid expense, the period covered by the amount charged to profit or loss during the year, and the unamortized balance or the prepaid expense balance at the end of the year. The client actually, for this in this example, the client even showed that there was a difference. Nagkusa na yung kliyente to show that there was a difference between the balance of the schedule they made and the general balance by 4 cents. Please note that like with other schedules from the client, we should check the mathematical accuracy of this schedule and check for ourselves whether the balance per GL indicated on the schedule is really the same as the general ledger balance. So, kahit na make sure, ito lang yung, let's remember this, even if yung client, naglalagay siya ng ganyan per GL, tapos may difference, we have to make sure na tama rin yung nilalagay niyang per GL balance. So, we don't readily accept yung differences na ini-indicate ng client sa mga schedules na binibigay sa atin. We have to check ourselves if the balance per schedule agrees with the general ledger balance also. And of course, we have to check if the totals are correct or even the yung cross-footing. So meaning yung from the invoice amount to the unamortized amount, yung cross-footings, yung horizontal footings, we should also always check as well, not just yung vertical, but the horizontal as well. This format of prepaid expenses allows us to easily identify balances for testing, what supporting documents through the reference numbers we will obtain from the client, and how the client arrived at the prepaid balances of the accounts. We can also easily identify on this format if there are accounts that should have no prepaid balance at all, just looking at the period covered. So for example, ang nakita natin is from June 20 CY to June to December 31, 20 CY. So if that means wala siya dapat na unamortized balance. And because ganito yung format na binigay ng client, kitang-kita natin yung mga dapat may prepaid portion na balance. So after getting a schedule like this, the next procedure we will do is to examine invoices, contracts, agreements, or other documentation for significant additions to these accounts. For insurance, inspect insurance policies as to coverage, beneficiaries, and evidence of liens on the property. For balances that reach the testing scope, examine appropriate and sufficient supporting documents such as insurance policies and/or premium billings for prepaid insurance. When reviewing insurance policies also, determine whether the coverage is adequate or not, whether the beneficiary of the policy is appropriate, and whether there are liens on the insured property. Also examine relevant documents for other significant prepayments recorded in the books to ensure the propriety of their recognition. When reviewing supporting documents, make sure to ascertain that the recorded transaction pertains to the company. That is, the documents are in the name of the company, the amounts on the supporting documents agree with the amounts recorded in the books, the period covered by the expenses align with the recording made by the company, and the prepaid expenses are classified as to current or non-current properly. Why do you think yung additional procedures for insurance was included here, like yung inspection of policies as to coverage, beneficiaries, and evidence of liens on property? It's because when we examine for insurance policies, we don't only look at the amounts. Make sure na yung beneficiary is correct, na yung company ang beneficiary, na yung name ng insurance policy is it's in the name of the company, and yung coverage ng insurance policy is enough. Kasi kuminsan, ang ini-insure, let's say nakalagay sa insurance policy, this covers yung motor vehicles of the company, parang ganun. And yet, ang carrying value ng motor vehicles ng company, let's say, is nasa 5 million. Ang insurance policy naman, nasa 400,000 lang. Yung bang ganung klaseng instance would lead us to say na misstated yung insurance policy? Definitely not. Kasi yun lang naman talaga yung kinuha nilang policy. Pero we have to raise or elevate yung ganung klaseng instance or matter na nakita natin to the management na kulang, na hindi enough yung insurance policy insurance coverage nila. So meaning this is just for as an added value service, ilalagay natin sa management letter natin to the client. Isa siya sa mga matters of improvements na dapat nating i-discuss sa kliyente. So in this example, assuming that the testing scope set by the audit team was 700,000, remember 700,000 ang testing scope, then we will theoretically only be inspecting audit pieces of evidence supporting the prepaid expenses or the prepaid rental expense because this is the only amount that meets the testing scope of 700,000. All the other prepayments are all below 700,000. However, for rentals, we always review not only the invoices or official receipts issued by the lessor, but we must always review the covering lease agreements as well to note for the terms and conditions of the lease, including lease commitments, if any, that will need to be disclosed in the financial statements. So accordingly, while the advance rental and the guarantee deposits amounts are below the testing scope, we might as well ascertain whether those amounts comply with the terms of and conditions indicated on the lease agreements also. Ibig sabihin, kahit na below 700,000 yung advance rental deposit saka yung security deposit, which is the guarantee deposit in this case, since hawak na natin yung lease agreements, kasi we can't not examine the lease agreements because may required disclosures for leases. May separate accounting standard for leases, and therefore, kahit na gaano kaliit or gaano kalaki yung rental expense mo or rental deposit or rental advance, we have to always examine the lease agreements kasi for all we know, non-cancelable pala yung lease agreements, and therefore, dapat mag-recognize ng lease commitments or mag-present ng lease commitments sa FS. So since hawak na natin, what I'm saying is, since hawak na natin yung lease agreements, kahit na below 700,000 itong advance rental and guarantee deposit, we might as well check kung tama yung ni-recognize nilang rental and guarantee deposits by tracing those amounts doon sa lease agreement. Ang sinasabi lang natin na hindi na natin kailangan gawin for this particular case is tingnan kung talaga bang binayaran nila yung rental agreement. Enough na yung makita mo doon sa lease agreement na meron na required sila to put this much amount ng advance rental sa guarantee deposit. Pero kung more than 700,000 ang amount niyan, aside from looking at the lease agreement, dapat tingnan pa rin natin, we should make sure that we examine yung actual cash outflow, meaning kailangan natin makita ng documents to support na talagang binigay nila yung pera doon sa lessor. So we examine official receipts from the lessor or yung bank statements ng company, or kung nag-issue ng check, then the check voucher. So I hope that's clear. For rental, kailangan yung lease agreements. And since hawak na natin yung lease agreements, we might as well check kung tama yung nakabook. Pero hindi natin kailangan extend pa yung procedure natin na para tingnan yung actual cash outflow. Kasi required yon na dapat tinitingnan din natin yung cash outflow. So the next procedure is, for significant account balances, recompute the ending balance and determine that the carrying amount does not exceed amounts properly allocable to future periods. For this procedure, we typically perform a recomputation of the significant ending prepaid expense balances and ensure that expenses that have been consumed or expired are properly recorded as expenses for the period, and only the portion of the expenses that will still benefit the future are recorded in the books as prepaid expenses. So we do recalculations, we do predictive testing. Finally, we review the minutes and significant agreements for evidences of the existence of prepaid assets and identify liens, pledges, or other security interests in these assets, if any. Don't forget to review documents such as minutes of meetings to ascertain whether the transactions relating to the prepaid expenses are properly authorized and if the prepaid expenses are free of liens, pledges, or other security interests. this activity is something that we do for not only for prepaid expenses, but for all the other accounts that we examine. We always make sure that we review minutes of meetings and other correspondences or agreements that could impact the account that we are auditing, in which case, in this case, yung prepaid expenses. So let's cap off or finish this discussion about prepaid expenses by working on this very short audit case. We'll have a very short audit case. That's just to show you how the audit of prepaid expenses is done. We were provided with this schedule of prepaid expenses, particularly prepaid insurance. The schedule shows that the account pertains to health insurance covering the period May 1, 20 CY to April 1, 20 FY or future year. The CY is for current year, by the way. The total amount paid was 578,700 pesos, of which amount 385,800 pesos was charged to profit or loss. And the remaining balance of 192,900 pesos was recorded as prepaid insurance. So what do we do on this schedule? So let's run the procedures down. Let's run down the procedures. So as a diligent auditor, we should immediately put the nature of the account and write, this account is used by the client to record the premiums paid on the health incentives of employees. So dapat, una muna is the nature of the account. Let's make sure that you always put that in your work papers. Because not all accounts, although pareho, let's say prepaid expense, a prepaid expense of one company, the nature of the prepaid expense of one company, the prepaid expense of one company can be may be different from the prepaid expense of another company. So make sure na you put down in your work papers the nature of the account in the work papers. The next audit procedure we need to do is check the mathematical accuracy of the schedule and to agree the balance per schedule with the general ledger balance. We document the performance of these procedures through the use of tick marks, like this. In this case, we only tested the cross-footing, meaning yung horizontal footings, since prepaid expenses consist of only one item, so wala namang i-add vertically. And therefore, there's no need to make a vertical verification of the mathematical accuracy of the amounts. Next procedure that we will do on this schedule is to ask the client for the insurance policy covering the 578,700. We then verify the prepaid balance through recalculations of the ending balance. So we will predict what should be the ending prepaid balance. Please note that the appropriate supporting documents for the amount of 578,700 pesos must be examined first before doing any recomputation of the ending balance. Your recomputation procedure will be for naught if it will be found out later that the amount paid of 578,700 pesos as recorded is not even correct. So make sure when we do recalculations, when we do test of reasonableness, we verify first the propriety of the basis that we will use. Kasi like for example, dito, itetest natin yung 192,900, right? Because we're doing prepaid expenses. Pero kung sa simula pa lang, yung amount paid pa lang na 578,700, mali na, based dun sa mga documents na may examine natin, magiging mali rin yung, although siguro makukuha natin yung prepaid balance na 192,900, pero mali yung makikita natin na mali naman pala yung 192,900. So essentially, it's garbage in, garbage out. So kung garbage ang basis natin, garbage then ang kalalabasan ang magiging output. So we have to make sure that before we do any procedures, we test first the basis. So here's how we will recompute the ending prepaid balance. We compute for the monthly amortization of the premium by dividing the total premium paid of 578,000 by 12 months. We will get 48,225. The insurance coverage was for May 120 CY to April 120 FY, which means that the prepaid portion would be for the months of January of the following year until April of the following year. So 3 months lang, January, February, March, essentially. Kasi April 1 yung ending nung coverage. So we multiply the monthly amortization we got earlier by 3 months and compare the same with the amount per books. This will show the overstatement of 48,225, which is equivalent to a month's amortization. So kasi yung kliyente, mali yung pagkakabilang niya ng future period. Yung April, kinonsider din niya. When in fact, it should only be for 3 months, ginawa niya 4 months. So that's how we do. So basically, ang sinasabi natin, for us, dapat ang prepaid portion lang should be 144,675. Si client, ang sa kanya, 192,900. So we have to make an adjustment doon sa overstatement of 48,225, which is equivalent to a month's rental. Finally, this is the last audit procedure that we will discuss for prepaid expenses. Sorry. We discuss the overstatement in prepaid expenses and request the client to adjust such overstatement. In cases such as this, we don't immediately post to our lead sheets and working trial balance adjustments for these differences. We first have to discuss the findings with the client and the necessary necessary adjusting entry that needs to be done. We can then request them to adjust the overstatement themselves or include the same in our list of proposed adjusting journal entries. Should the client disapprove of the adjusting journal entries, we should carry the past adjustments to the summary of unrecorded misstatements for evaluation later as to their impact on the financial statements and the auditor's report. So for those not familiar, the summary of unrecorded misstatements is a list of all the adjustments that were passed by the client, meaning hindi tinanggap ng kliyente. Adjustments that we proposed for them to take up, pero hindi nila tinanggap. So we carry those to the summary of unrecorded misstatements, and this summary of unrecorded misstatements will be evaluated at the end of the audit for their impact on the fairness of the financial statements. Actually, that's essentially how prepaid expenses how the audit of prepaid expenses is done. So, medyo straightforward siya in this case because prepaid insurance yung ginamit nating example. Pero when it comes to other prepayments nga like advertising cost or something or some other more complicated prepaid insurance that you might encounter with your clients, be sure that you know your accounting standards. Kasi kung hindi natin kabisado ang accounting standards, especially let's say sa advertising cost, baka yung kliyente ipilit niya sa atin yung gusto nila, i-insist nila sa atin yung gusto nila na gawin siyang prepaid na hindi naman nagko-comply sa accounting standard. And because we don't know the accounting standard, tinatanggap na lang natin yung gusto ng kliyente, which is not correct. That is not how auditors should be doing. So, if it's okay with you, we'll now go to the phase 2 of the training, which is auditing other assets. This one. The substantive testing procedures performed on other assets. Similar to prepaid expenses, the order of our discussion would be very brief also. And it will cover yung basic understanding of other assets, the common issues associated to other assets, the principal audit objectives in auditing other assets, and finally, the typical audit procedures performed on the account. So we will start with the basic understanding of other assets. What are other assets? Other assets pertain to a group of assets that are not reported in major categories on the statement of financial position, such as cash, trade and other receivables, inventory, fixed assets, or investments. Other assets can be presented under the current assets or non-current asset sections of the statement of financial position. They are classified as current if their future economic benefits are expected to flow to the company within 1 year after the end of the reporting period. Otherwise, they are classified as non-current on the statement of financial position. Common examples of other assets are long-term prepaid expenses, deferred charges, intangibles, and other non-current deposits. Similar to prepaid expenses, other assets are also generally not material in amount compared to other account balances on the financial statements. In this regard, the associated inherent risks related to other assets are often deemed low also. Although these assets are categorized as other on the statement of financial position and are typically not as significant as the other account balances, it does not mean that these accounts do not carry any risk with them that would impact the fairness of the financial statements at any given cutoff date. So, para siyang prepaid expenses, it doesn't mean na dahil hindi siya malaki in amount, hindi na niya pwedeng i-misstate yung financial statements. For this training session, we will include intangible assets along with deferred charges and deposits in the other assets account. Please note that there would be times when these accounts will have significant balances that would require them to be presented as separate line items on the statement of financial position. When they are not significant in amounts, however, they can be presented as part of the other assets account on the statement of financial position with the required disclosures presented on the notes to the financial statement. So meaning in this training session, we will assume that these accounts have no material balances, or the balances of these accounts are not material. So we consider them as part of other assets. Pero pag material sila, they should be presented separately as a separate line item, on the financial statement, on the statement of financial position in particular. So what are deposits, intangibles, and deferred charges? A deferred charge, let's start with deferred charges. A deferred charge is similar to a prepaid expense, except that it is typically long-term in nature. Accordingly, a deferred charge is a prepayment that will not be completely consumed until after one or more future periods. Similar to the accounting treatment for prepaid expenses, deferred charges are also amortized systematically over the life of the underlying asset or liability from which they arose. A typical example of a deferred charge is the bond issue costs that are deferred and amortized over the life of the issued bonds. Another example of deferred charges is research and development costs that are permitted to be capitalized and deferred under relevant accounting standards. By the way, research costs are not capitalizable. Only certain developmental costs can be deferred. Next is deposits. I think we all already know what the meaning of deposit is, but just the same, let's define it. A deposit is a money given as a pledge or down payment. Deposits are either refunded or applied at the end of the agreement. Examples of typical deposits that are presented as other assets are security deposits, related to rented space, deposits made for utilities, etc. On rare occasions, cash deposited in a bank may also be required to be presented as part of other assets on the statement of financial position when such cash is restricted as to its use. So kung long-term ang restrictions over the cash, then it's considered as other assets. Otherwise, they will be considered as current asset, not cash. So let's define intangible assets before we move on to the common risks associated to other assets. We have already defined deferred charges, deposits, and now intangible assets. I would like to emphasize that other than intangible assets, deferred charges, and deposits, there are more types. I'm sorry. Intangible assets are assets with no physical substance but with financial value. Yun yung other assets. So madali lang naman siya. So this is different from the tangible assets like fixed assets. These are no assets with no physical substance but with financial value. I would like to emphasize that other than intangible assets, deferred charges, and deposits, there are more other assets that can occur or can exist in your client's records. As we have said earlier, any miscellaneous asset that is not material in amount and is not required by the accounting standards or regulatory bodies to be presented as a separate line item on the statement of financial position can be grouped together and presented as other assets. So, kaya nga siya tinawag na other assets kasi parang siya na lang yung, ito hindi mo siya ma-classify as cash, hindi siya cash, hindi siya receivable, hindi siya inventory. So, ibig sabihin, other siya. Yun yung, kaya siya tinawag na other assets because parang kung it's a combination or a mixture of accounts na either small in amounts or hindi siya pwedeng i-classify as one of those required line items, one of those accounts required by the accounting standards to be presented as a separate line item on the statement of financial position. So, again, we will go, again, kung wala kayong question about other assets, the nature of other assets, then we will move on now to the common issues. Siguro if you will have any questions, you can put it in the chat box and then I'll answer them later. So again, similar to what I've said about prepaid expenses, even if other assets are typically not significant in amount compared to other accounts on the statement of financial position, other assets can still be used to manipulate financial statements or be subject to erroneous accounting treatment. Misstatements in other assets are more common than prepaid expenses. This is because certain other assets involve judgments and estimates which are prone to error and manipulation. Here are 4 of the common issues associated with other assets that we will briefly discuss. The first common issue is that other assets are not properly identified and recorded. Other assets, specifically some intangible assets, are difficult to identify. Accordingly, there have been cases where intangible assets were not recognized when such assets exist. Many people still immediately think that when that when we talk of assets, we think of things that can be seen or touched, have shape and form, and can be weighed and physically measured. However, as we have defined intangible assets earlier, these are assets that cannot be seen by the naked eye, cannot be touched, cannot be weighed, cannot be physically measured, but with financial value. The examples given or we can give of intangible assets are trademarks, copyrights, patents, goodwill, etc. These are the most common forms of intangible assets that most accountants give as examples when asked about intangible assets. So when somebody asks someone to give an example of intangible assets, these are the usual uh, intangibles that are given. However, there are other intangible assets that accountants fail to identify because they are not the types of assets that are discussed in accounting books or taught in school. So ito yung mga hindi wala sa libro. These are intangible assets that can be considered as rare and often arise and identified when a business acquisition occurs because the selling company would include such intangibles in their selling price of the company. An example of this intangible asset is a famous company brand. I think we can all agree that brands are intangible, but they have value. For example, it was reported that when Procter & Gamble purchased the Gillette company in 2005, it placed a value on the Gillette brand at more than $25 billion, or almost 50% of the total purchase price by Procter & Gamble for the whole company. That's how expensive the brand of Gillette was. Another telecommunication company that expanded its operation by acquiring its major competitor recognized intangible assets for the customer list that was turned over by its competitor to the company. So, in this other case, yung customer list naman ang binigyan niya ng value. So, listahan lang siya and yet may value. That's an intangible. So, that is considered an intangible asset. Still another company that owns and operates railroad tracks sold the airspace above the tracks to its buyer, contending that such airspace can provide future cash flows to the buyer when the buyer builds structures such as malls above the railroad tracks. Had acquisitions not happened for these companies, the intangible assets might have never been identified or recorded in the books of the acquired company. So even yung hangin, pwedeng gawing intangible asset, which this company did. Because ang binenta niya is yung airspace, yung hangin doon sa ibabaw ng yung empty space sa ibabaw ng railroad tracks. So another common risk associated to other assets is that other assets are not recorded at the appropriate amounts. Because other assets account is comprised of various types of assets, the accounting treatment, including the amount at which these assets should be recorded, differs for each type of asset included in the account. Some other assets have finite lives and subject to amortization, while some have infinite lives and therefore subject to impairment. Some costs, on the other hand, which are not allowed to be deferred under relevant accounting standards, may have been deferred erroneously or intentionally by the company, thus affecting the recorded amount. But the risk of recognizing inappropriate amounts of other assets is highest for those assets whose measurement and valuation involve judgment and estimates. Example of this type of other assets are intangibles and deferred costs. For intangibles, it may be straightforward to determine if the cost of, say, licenses or franchises, for example, because the cost of these intangibles typically are equivalent to the cash and cash equivalents paid for them by the company. However, it would take experts to determine the fair value of the acquired brand or customer list and to determine whether such intangibles have lost their values or not. For deferred costs, certain criteria are required to be applied before costs can be considered capitalizable. For example, for research and development costs, research costs are not allowed to be deferred, while only certain development costs are allowed to be capitalized under PFRS. So it's very hard to determine the fair value of intangible assets such as this. For example, yung lang customers list, actually that was a client of mine before sa abroad. And it took us like, I think, 1 week to audit yun lang customers list na yun, yung fair value ng customers list na yun. Because there was a lot of back and forth between our firm and the client on how they determine the fair value. So it's not easy. So the next common issue that about other assets is that other assets are recognized for expenses that should be charged to statement of income. A good example of this common issue is the capitalization of research and development costs. Sometimes some companies that are engaged in businesses that require massive research and development activities, such as those in the medical, biological, or technological industries, try to capitalize on as many expenses as possible to present better results of operations. While the accounting standards are very specific as to which types of research and development expenses can be capitalized and which are not, still some erring companies may try to defer the recognition of the expenditures in the profit or loss statement as much as possible by modeling the nature of the expenses involved. The same is true with, for example, bond issue costs. While the accounting standards state that direct bond issue costs can be deferred over the life of the bond subject to amortization, some erring companies try to capitalize expenses that are not even directly associated with the issuance of the bonds. Sometimes also when the bonds are paid early, the company fails to remove in its entirety the associated deferred bond costs from their records, thus overstating the other assets account. Finally, and to end our discussion on common issues associated with other assets, let's briefly discuss the last one, which is other assets are not properly classified. Other assets can be classified as current or non-current. However, some accountants tend to automatically classify other assets as non-current just because of their name, without considering the period over which the benefit from the assets will flow to the company. I think it needs to be pointed out that the correct classification of assets and liabilities is one of the critical factors in determining whether a set of financial statements is fairly stated or not. It is to be noted that some key performance indicators, which the management, investors, and creditors often use to assess the financial health of a company, rely heavily on the correct classification of assets and liabilities. Examples of these are the current ratio and acid test ratio. Accordingly, some erring companies intentionally manipulate the classification of their assets and liabilities to suit their needs. However, as I always emphasize, not all misstatements in assets and liabilities, including other assets, are a result of fraud or intentional misstatements. Misstatements can also occur from errors due to weak internal controls of the company over its financial reporting and financial closing processes, or because of incompetent employees. So that being said, let's now move on to the main topic of our training session, which is the principal audit procedures being performed on other assets. But before that, again, we should know what we aim to achieve at the end of auditing the other assets. So we have to discuss first the audit objectives in auditing other assets. These are those audit objectives. We will discuss these audit objectives very briefly, one by one. So the first one is that all assets classified as other assets, we have to ascertain that all assets classified as other assets, such as deferred charges, deposits, and intangible assets on the balance sheet really exist. All recorded income and expenses relating to these assets have accrued to the entity at the statement of financial position date. So this audit objective addresses the existence and occurrence assertion for such an account. For example, for an interest-bearing deposit presented as other assets, not only should the procedure be able to address the existence assertion for the deposit account, but also the occurrence assertion for the related interest income that will flow through profit or loss. The same is true for when the acquisition of the other asset require the company to incur expenses that are permitted or required to be capitalized to other assets acquired. The next audit objective is to ascertain that all other assets owned by the entity are included on the balance sheet and all income and expenses accruing from these assets at the balance sheet date have been recorded. This audit objective, addresses the completeness and cut-off assertion. Similar to prepaid expenses, our audit procedure should be able to ensure that all other assets of the company are recorded properly on the statement of financial position, and all related income and expenses accruing to the company are recorded in the statement of income. The next audit objective is to ascertain that other assets in this classification are included on the balance sheet at the appropriate amounts and that the related income and expenses are stated on the income statement in the appropriate amounts. This audit objective aims to address the assertion, measurement, and valuation. Our audit procedure should be able, therefore, to ensure that the recorded other assets of the company and the related interest, income, or expenses are neither overstated nor understated as at the end of the period under review. The fourth audit objective is to ascertain that the entity owns or has a legal right to all other assets in this classification. All other assets are free of liens, pledges, or other security interests, and all other security interests are identified. So this audit objective addresses the assertion, rights, and obligations, but more about rights than obligations. Definitely not obligations, because obligations is relates more to liabilities. In this regard, the audit procedures we will perform on other assets should be able to ensure that only assets owned by the company are recorded in the books. That is, assets of other entities or individuals, such as those of the owners or related parties, are not recorded as assets of the company for, say, presenting a better financial position. The audit procedure should also be sufficient to detect whether the assets are free of liens, pledges, or other security interests, or if they were used, for example, to collateralize loans or were used as guarantees, that the audit procedures that will be performed on them will be able to identify the presence of such circumstances, if any. The last but not the least audit objective in auditing other assets is to ascertain that other assets and all related income and expenses accounts are properly classified, described, and disclosed in the financial statements, including notes in conformity with the prescribed accounting principles. So similar to prepaid expenses and other accounts we have so far discussed, our audit procedures on other assets should also be designed to ensure that the proper classification of the assets, their proper description, and adequate disclosures in the financial statements are made properly. So those are the 5 audit objectives in auditing other assets, similar actually to the audit objectives of prepaid expenses. So let's now move on to discussing the substantive audit procedures typically performed on other assets. Again, I would like to point out that these audit procedures are not exhaustive or not all inclusive. Other substantive audit procedures may be deemed necessary to be performed by us auditors depending on the results of the planning activities, including the risk assessments performed by the audit team. Also, we will again not discuss any more in detail the very first audit procedure we must perform, which is the preparation of the lead schedule and the subsequent obtaining of schedules for accounts with significant balances. We will move on immediately to this next audit procedure, which is to compare account balances with those of prior periods and investigate any unexpected changes or absence of expected changes. Similar to other accounts, analytic review procedures should also be performed for other assets to identify significant or unusual fluctuations that could result from fraud or error. This is done by comparing the balances of the details of other assets with those from prior years. Any significant variances, unexpected changes, or absence of expected changes when one is expected in the other assets account should be investigated. Here's a sample comparison of the other assets account at the end of the current year or 12/31/20 CY and the end of the prior year or 12/31/20 PY. As we can see here, the other assets account is composed of computer software, which is an intangible asset, advanced rental, and miscellaneous deposit. We can also see from the comparison that the computer software is a new account since there was no balance in this account in the prior year, so 0. The balance of the advanced rental, on the other hand, did not change, so 0 ang movement. While the miscellaneous deposits balance only changed by 8,108 pesos. Based on these comparisons, we will need to investigate the large fluctuation in the computer software amounting to 2,678,000 since siya lang yung may malaking fluctuation. This means that we will perform additional procedures on this account and the related accumulated amortization. As to the advanced rental account, in the assumption that this is a recurring client and we are not aware or made aware that there was a change made in the company's rental agreement, which we previously had examined already, then the lack of change in the amount should be expected, and therefore for now, no additional procedures nor investigation appear necessary to be performed on this account balance. As to the balance of miscellaneous deposit, as well as the change in this account, these amounts are way below the tolerable error or TE of 1,500,000. Hence, no substantive procedures nor further investigations will be made for the account balance and the associated fluctuation in the balances. Please note, however, that additional procedures may need to be performed on advanced rental and even on the miscellaneous deposit if during the performance of our audit procedures relating to other accounts or maybe during our review of minutes of meetings, agreements, and other correspondences, we uncovered new lease agreements or significant deposits that were unrecorded by the company. So, pwede pa rin, even if hindi natin initially siya gagawa ng procedures, based sa, depending dun sa results ng review natin on other accounts or review of documents, pwede pa rin na mapipilitan tayong bumalik and to perform procedures on the advanced rental and miscellaneous deposits as well. So moving on to the next audit procedure, when significant, perform an overall test of income or expense related to other assets. So take note of the key word here, the operating word, which is significant. Only when it is significant. If it is not significant, then we don't have to perform this procedure at all. A company can have other assets which earn income or would require recognition of expenses related to it. Examples of other assets that could earn income are restricted bank accounts or time deposits. Even long-term interest-bearing other receivables can be recognized as part of other assets account as long as the disclosures required by the relevant accounting standards and regulatory bodies relating to such receivables will be made in the financial statements. The same is true for investments other than investment in subsidiaries, associates, and joint ventures. Such investments can form part of the other assets account as long as the disclosure requirements of the relevant accounting standards are followed by the company and as long as they are not material in amount. In this regard, when significant, we perform an overall test of interest income earned from the deposits, for example, by multiplying the average interest rates by the average interest-bearing principal balance outstanding. Aside from income, we also test the reasonableness of the amortization for other assets with finite lives. Please note that we don't only test the mathematical accuracy of the amortization, but also the reasonableness of the life use and the amortization method used by the company also. So when we do testing of amortization, we don't only test the amounts, we also test yung reasonableness of the life being used by the company in amortizing the asset. That's very important. Hindi natin basta-basta tinatanggap. We should not readily accept the lives being used by our clients. There had been a client before of our firm before na yung binigay na life sa computer equipment was 15 years. So, na-question yun, and actually the client also, nagbago yung management let me backtrack. Yung life na binigay sa computer software was 15 years. We questioned that life, and then the client themselves, actually, yung management, hindi lang alam nung accounting actually, pero yung management pala, they do not find the estimated life reasonable also. So when we questioned it, madaling na change, madaling na kapag reconsider yung client ng life kasi may directives na from above rin to review yung life na binigay nila doon sa software. As per our sample, the computer software, which is an intangible asset with finite life, is subject to amortization. Based on the schedule presented by the client, it appears that they correctly subjected the asset to amortization kasi meron accumulated amortization. So tama naman yung client. So software siya with finite life and therefore subject to amortization. And the client apparently really subjects the software to amortization. The only question then or task that remains for us is to determine whether the accumulated amortization recorded by the company of 669,726 pesos is correct and whether the useful life used by the company in computing the amortization is reasonable or not. In this example, we will assume that the useful life used by the company of 4 years is reasonable. We will also be assuming that the computer software was acquired and used by the company at the beginning of November of the current year only. With this information, we could recalculate the amortization by dividing the cost of 2,678,906 by the useful life of 48 months or 4 years as used by the company, multiplied by 2 months, which represent the amortization for November and December. This will result in the total amortization amount for 20 CUI of 111,621 pesos. Comparing this amount with the recorded accumulated amortization by the company in 20 CY of 669,726 pesos, it is obvious that the company's amortization is overstated by 558,105 pesos because the company recorded a full year amortization when in fact the software was acquired and used by the company only at the beginning of November 20 CY. When differences such as this arise, we should discuss such differences with our clients and either propose an entry to adjust the overstatement in accumulated amortization and amortization accounts or request the client to take up and correct the overstatement themselves. So not only for this particular case, but in all cases, actually, when we see or discover errors that need to be adjusted in our client's records, we don't immediately post those adjustments to our working trial balance. We must first discuss the errors that were noted by us kasi for all we know, mali yung pagkakaintindi natin. Pwede kasi magkaroon ng case na mali lang yung understanding natin noong circumstances ng account or kung ano yung nangyari sa account. Pwedeng tama yung kliyente, meron lang tayong information na hindi alam. Kaya doon sa testing natin, lumalabas na may error yung company. So pag propose tayo ng adjustment, ayaw nilang tanggapin. So to avoid those types of, those circumstances, those times na tatanggihan lang ng client yung mga adjustments natin, the best thing to do is for us to discuss first, explain natin sa kliyente kung ano yung nangyari, kung paano natin na-derive yung error, and then tell them na ito magpo-propose kami ng adjustments. And then, from there, you can also ask the client kung gusto nila na sila na lang ang mag-take up. Meaning, hindi yung auditors ang magpo-post sa libro, but yung mismong kliyente, ipopost na nila sa libro nila without getting yung list ng adjustments proposed by the auditors. So another procedure that we do for other assets is to determine the basis on which additions and reductions are recorded, and then examine invoices, authorizations, contracts, agreements, and other data supporting the other assets. We should examine relevant documents for significant other asset account balances, which also showed large fluctuations from the prior year. In the previous example given, only the acquisition of software was deemed significant for purposes of the audit. Siya lang yung malaki. Accordingly, we should ask for documents supporting the acquisition of the software to verify the nature, authorization, date of acquisition, and acquisition price. Examples of documents we may need to verify are the minutes of the Board of Directors meeting for the authorization and purchase agreement, collection receipt from the seller, invoices, and or bank statements for the verification of nature, date, and amount of the recorded software. For accounts that had been outstanding since the previous year, we can just trace the amounts to the prior year's work papers if there was no movement noted in the current year. Or if there were movements in the account during the year, we can examine documents for the significant movements only. In other words, there's no need to examine documents for the whole amount again, since the amount from the prior year had been subjected to audit already. I would like to point out, however, that examining documents to verify the appropriateness of the recorded other assets in the books of a company is not always as simple as the purchase of computer software as we have just discussed. Let's take, for example, intangible assets. The accounting standards provide multiple criteria before an intangible asset can be recognized. It also provides how the intangible asset should be initially measured depending on how the intangible asset was acquired. For example, for identifiable intangible assets that were separately acquired and paid for in cash, the recording of the intangible asset is pretty straightforward because the cost of the intangible asset would be the purchase price plus or minus import duties, non-refundable taxes, trade discounts, rebates, and any directly attributable cost of preparing the assets for its intended use. An example for these intangible assets is the computer software we just discussed. However, intangible assets acquired through business combination, government grant, or non-monetary exchanges are not as easily initially measured as those from separate acquisitions. These types of intangible assets require the use of fair valuation. For internally generated intangible assets, they require judgments as to whether the costs incurred are capitalizable or not based on the criteria set by the accounting standard. The same is true with certain deferred costs. The standard is very specific as to which costs can be deferred and which should be charged directly to profit or loss upon incurrence. In other words, looking and seeing documents for the amounts recorded by the company is not enough for certain other assets. Examination of documents should always be accompanied by the auditor's knowledge on the proper accounting treatment of the assets they are auditing. So importante, when we are assigned to audit, let's say, intangibles or deferred charges, that we know our accounting standards. Hindi pwede na hindi natin alam yung accounting standard. Kasi pwedeng nakikita natin, tama nga yung lahat ng documents tie up, yung invoice tie up dun sa amount, yung invoice tie up sa amount. So tinatanggap na natin na tama yung deferred asset balance. When in fact, hindi naman pala siya pwedeng i-defer. So kung di natin alam na hindi pala siya pwedeng i-defer, ma-overstate yung assets ng company. So make sure that when you are assigned to audit any account, not just itong other assets, na hindi kayo familiar, make sure to brush up your accounting standards and before you go to the client. Kasi yung client mismo, kuminsan, nakikita rin nila kung hindi alam ng auditor yung ginagawa niya. And that is something that we should always avoid kasi nakakasama sa image sa image natin, pati yung competence natin naki-question ng kliyente pag hindi natin alam yung mga tinatanong natin sa kliyente. The next audit procedure for other assets is to determine whether the carrying amounts of other assets are appropriate. So tapos na nating i-verify yung cost, we will now go to the carrying value. Other assets, such as intangible assets, investments, deposits, and other non-current assets are typically subject to impairment testing. This means that the company should, at the end of each reporting period, actually for SMEs, at the end of each reporting period, but for full PFRS, every time na merong indication of impairment, dapat mag-review ng impairment. So, at the end of each reporting period, determine whether there are indications of other assets being impaired. If indications of impairment exist, then the company should estimate the loss in value of the identified asset or assets. Any impairment loss identified on other assets should then be recognized by the company to reduce the assets to their net recoverable value. This is where the audit becomes somewhat difficult to perform because determining whether an asset is impaired or not requires professional judgment. Hindi madaling mag-review ng impairment. Even yung indication lang ng impairment is hindi ganon kadaling gawin. PAS 36 states that to determine whether an impairment loss exists, all you need to do is compare the assets carrying amount with its recoverable amount. If the recoverable amount is less than the carrying amount, then the impairment loss has occurred. So, parang andali, right? compare mo lang yung recoverable value with the carrying value, and then madidetermine mo na kaagad yung impairment loss. But it's not that easy. It's not that simple. Because if we dissect further what a recoverable amount is, then we'll know that determining this amount is not easy, itong recoverable amount. According to PAS 36, the recoverable amount is the fair value of the assets less cost of disposal and value in use. Again, you may think and ask, I know what a fair value is, but what is a value in use? A value in use is the net present value of a cash flow or other benefits that an asset generates for a specific owner under a specific use. Recoverable amount, fair value, and value in use are some of the accounting terms that the auditor assigned to verify impairment of assets must be familiar with. Dapat if you have been assigned to audit impairment or to determine kung may dapat na impairment loss na i-recognize, you have to be familiar with all these terms. However, we will not discuss in detail all these terms because a separate training video will be needed to discuss impairment in depth. Since mahirap, hindi madali ang impairment, it should be discussed in another session. We are only briefly mentioning these terms to emphasize that it is not easy to test impairment losses. As you can see, determining fair values and even values in use typically need the services of evaluation specialists. It therefore costs money to determine these values. Aside from the reason that impairment losses negatively affect the bottom line of companies, the costly determination of fair values and values in use pushes some companies away from performing proper procedures in determining the existence of impairment losses, if any. May mga companies kahit obvious nang may impairment, ayaw pa rin mag-review ng impairment because it costs them money. This is why some companies still try to determine impairment losses based on their judgments. However, as auditors, we need to ensure that the companies we audit comply with the requirements of PFRS in determining the amount of impairment losses, if any. Accordingly, the auditors assigned to audit other assets should have the appropriate level of skills, experience, knowledge, and competence in auditing the account. An appropriate level of guidance from the executives of the engagement team should also be made on matters relating to impairment. I remember when I was auditing, when I was assigned to audit yung impairment losses ng client ko sa abroad, yung partner mismo talagang yung partner na field work siya. Talagang nag-o-audit siya. Dalawa kaming nag-o-audit nung account because I know na hindi pa ako, at that time hindi pa ako capable of really auditing yung tamang pag-audit ng, hindi ko pa kayang i-execute yung tamang pag-audit ng impairment losses because of the numerous estimation and judgment na ginawa ng kliyente. So I needed the help of the audit partner to audit the account mismo. So dalawa kaming nag-audit, sabay namin ino-audit yung impairment losses. That's how important then, that's why it's important then na pag may mga ganitong klase ng transactions with your client, that you ask the help of your executives. The next audit procedure is to determine whether other assets are properly classified and described in the financial statements. I would like to reiterate what I've said earlier, that the correct classification of assets and liabilities is one of the critical factors in determining whether a set of financial statements is fairly stated or not. Hindi simple or hindi, paano ba yan? Hindi importante. It's very important for us to make sure that all assets and liabilities of the company, of our client, are classified properly as to current or non-current. Hindi yung iba kasi parang sa kanila hindi importante yung classification as long as the balance is correct, parang okay na sa kanila, but it's not true because the going concern issues of some companies are affected by the classification of the assets and liabilities. As I have stated earlier, some key performance indicators which the management, investors, and creditors often use to assess the financial health of the company rely heavily on the correct classification of assets and liabilities, such as the current ratio and acid test ratio. In this regard, it is important for us auditors to always ascertain that other assets are properly described and classified in the financial statements either through recomputations or examination of supporting documents. I used to have a client na mali yung classification niya ng loans. Ginawa niyang long-term yung current loans, malaki yung loans. Nung na-classify siya correctly, maraming investors yung parang nag-back out. Yung mag-i-invest sana, biglang nag-back out yung mga investors kasi nung una, ang nakita nila, liquid yung company. Nung pala, hindi siya liquid. Nung na-audit na, nakita na hindi naman pala siya liquid. So, nag-back out yung mga investors. That's how important classification is when it comes to assets and liabilities, including other assets and prepaid expenses. So the last but not the least substantive audit procedure we will discuss is to make sure to review minutes and significant agreements for evidences of the existence of assets in this classification and of liens, pledges, or other security interests in these assets. We should also review documents such as minutes of meetings, agreements, and other correspondences to ascertain whether the transactions relating to other assets were properly authorized and to also determine whether any of the assets presented under other assets were used as liens, guarantees, or collateral to debt instruments. To help you understand further the procedures on auditing other assets, we will finish this training session with this short audit case. So ito yung parang last nating gagawin. It's an audit case for other assets and for other assets. So this is the case. XYZ is a new client. The previous financial statements of the company were audited by other auditors whose audit work papers were unfortunately not made available to us. We were assigned to audit the we were assigned to audit the other assets account of XYZ company amounting to 543,376. The materiality level set for the engagement was set at 750,000 as was encircled here. The tolerable error or TE or for performance materiality is at 450,000 pesos. And the de minimis amount or summary of audit differences threshold was set at 15,000. With this information in mind, we requested the breakdown of the other assets from the client. This was the schedule provided to us. The total amount of the other assets of 543,376 is comprised of an advance rental fee of 465,687 pesos, leasehold rights of 50,000 pesos, and miscellaneous deposits of 27,689 pesos. Based on the audit strategy set by the audit team, the only account that was considered significant is the advance land rental fee of 465,687 pesos. Accordingly, you have requested your client for documents supporting the recorded advance rental fee of 465,687 pesos. So we have identify the land rental fee as yun lang yung i-audit natin. The client gave us a copy of the land rental agreement that was executed 4 years ago. However, the client said that it would be difficult for them to pull out the hard copy of the OR or official receipt issued by the lessor for the advance rental fee since the transaction happened 4 years ago and all hard documents from prior years had been sent to an off-site warehouse where they admitted that files were not stored systematically. They, however, provided us a check image of the payment made to the lessor since their depository bank emails them a copy of all the check images that clear the bank. So instead of ORs, for the rental fee na binayad ng company 4 years ago, ang naibigay sa atin ng client are check images covering those payments. Based on our review of the rental agreement, we noticed that the agreement is for 5 years and is renewable upon mutual agreement by the lessor and the lessee. The rental agreement calls for a monthly rental fee of 156,000 pesos net of VAT and advance rental payment equivalent to 3 months. The advance rental fee will be applied against the last 3 months of the rental agreement. The property being leased is a parcel of land that is being used by the company for drying grains that it uses in its products. Further investigation revealed that the board of directors discussed and approved the transfer of its drying activities to a place nearer the company's plant to save on freight costs and mandated certain officers of the company to start looking for another parcel of land to lease. The questions are, based on our recomputation, the advance rental fee should be 468,600 computed as 156,000 times 3 months and not 465,687 as recorded. So there's a difference of 2,313 between our recalculation and the amount recorded in the books. So what should we do with this information about this difference in particular? And another question is, based on the results of our review of the documents, can we conclude that the client's other assets account is fairly stated as of December 31, 20 CY? So let's answer these two questions together. Question number 1 is, what will we do with the difference of 2,313 pesos? My suggested response here is, we do nothing. We don't have to do extra efforts for this difference in amount anymore. Here are the reasons. First, we were able to verify through the check image provided to us by the client that the amount paid to the lessor was only 465,687 pesos, and therefore, for all intents and purposes, the asset recorded and essentially the amount recoverable by the company from the lessor is only this amount and not 468,000 pesos as presented in the lease agreement. Second, the difference is only 2,313, which is way below the de minimis amount or sub-threshold of 15,000. If you are not familiar with the concept of de minimis or sub-threshold, this is the amount set by auditors to determine the amount of misstatement that would be carried to the summary of audit differences for further evaluation as to their impact on the fairness of the financial statements and their impact on the audit report. Except for certain circumstances, any misstatement found during the audit that is below the set de minimis amount is generally not carried to the summary of audit differences anymore. These misstatements are generally passed for further investigations because the misstatements are considered so trivial that if not corrected, they are not expected to have any material impact on the fairness of the financial statements anymore. So masyado na silang maliit na kahit ano pang gawin, kahit may error, hindi naman nila mami-misstate materially yung FS. And since it's only 2,313 and below the SAD threshold of 15,000, we don't have to do anything about that amount anymore. For question number 2, which is, can we conclude that the client's other assets is fairly stated as of December 31, 20 CY already, given the 2,313 pesos na difference and also yung difference in the amount presented in the lease agreement compared to the actual amount given to the lessor. Can we conclude that the other assets is fairly stated already as of December 31, 20 CY? The answer is no. It's actually not, we cannot actually yet say na just because may 2,313 lang na difference and may konting difference between the amount presented on the lease agreement and then sa check images na nakita natin is na fairly presented na yung other assets account. So the answer is no. The lease rental is set to expire already the following year, which is the 5th year of the agreement. Remember, yung lease agreement was executed 4 years ago. So nasa 5th year na tayo. When we are doing the audit, nasa 5th year na tayo. Based on our review of the minutes of the Board of Directors meetings, it is very apparent that the lease agreement will no longer be renewed dahil naghahanap na sila ng another parcel of land, di ba, to lease. Accordingly, the advance rental fee, which will be due for application the following year, should be reclassified to current assets already as of December 31, 20 CY. Please note that I will also suggest that we discuss and reconfirm with the client the management intention of not renewing the rental agreement at the end of the 5th year to further strengthen our position of the need to reclassify the advance rental fee from the non-current to current already. Remember, yung classification nila ng rental, advance rental was under non-current because 5 years yung term no agreement. But on the 5th year, nagkaroon na ng intention or merong plan to not renew the lease agreement anymore. Therefore, mag-expire siya on its own. In such a case, dapat presented na siya as current asset. Part na siya, magiging part siya ng other current assets. Dapat lumabas siya, ilabas natin siya from other asset to the current asset. So as far as the balance is concerned, walang issue. Maliit lang yung differences na nakita natin. But it is more on the classification that we said is very important that na nagkaroon ng issue. So dapat, when we do audits like this, dapat tinitingnan natin lahat ng bases, not only the amounts, but yung classification nga like this. So, I hope you got something from this case. Kasi I think maraming cases, nagkakaroon talaga ng cases na ang nakikita lang ng auditor kung minsan is yung balance. Hindi niya napapansin yung tamang classification nung account na nire-review niya. So that is something that we should really be worried about when we do, or we should be alert for when we do audits of accounts, not just for other assets, but all other accounts as well. Yung classification, that is a very important part of auditing balances. So actually, that's it. That will end our training for this session, kanina wait lang. Kanina may nagtanong, I think, ang sabi niya, one of the questions given to me earlier was, sabi niya, what are the effective substantive procedures on other assets? The effectivity of the substantive procedures on other assets depends on the result of your risk assessment process. Tapos yung stages ng audit, which is yung planning, substantive audit procedures, and then the concluding phase. So planning phase, substantive testing phase, and the concluding phase. So right now, nandun tayo sa second phase. Nag-jump tayo dun sa second phase. Kasi yun yung, kumbaga sa nitty-gritties of the audit. Pero ang pinaka-importante dun sa 3 phases na yon is the planning phase actually. Kasi dun sa planning phase, dun natin ginagawa yung risk assessment process. So ina-assess natin kung nasaan yung mga risk dun sa kliyente. Anong klaseng risk? High risk ba? Low risk? Moderate risk? Pagdating sa other assets, nasaan ang risk? Nasa risk ba ng recording? Yung tao, or baka nasa tao. Kasi baka doon pa lang sa planning, malalaman na natin incompetent yung tao or hindi siya maalam sa, let's say, sa intangibles or sa deferred assets, or walang proper review na ginagawa sa taong nagpo-post sa other assets. So basically, sa risk assessment, doon natin ina-identify lahat ng risk na dapat ma-address ng substantive audit procedures. So ibig sabihin, pag mali yung risk assessment process natin during the planning phase, kahit anong substantive audit procedures ang gawin mo, kung hindi naman yan na-address yung risk na in-identify previously, hindi siya magiging effective. So in other words, the effectivity of the substantive procedures rely greatly sa quality ng risk assessment procedures or ng planning activities na ginawa nung audit team. Kasi all these substantive audit procedures that we discussed, these are subject to customization. Kung if you will notice, lagi kong sinasabi na dapat it should be the audit objective should be, or the audit procedures should be able to address the audit objectives na dinidiscuss ko earlier. It's because yung substantive audit procedures should be customized to the needs of your clients. For example, kung yung kliyente mo, magulo ang libro, therefore, baka yung mga vouching of documents, yung mga ganun, baka hindi maging effective. Kasi kahit na may binubuk nga siya, sabihin mo na binubuk, pero kung hindi naman reliable yung mga amounts na binubuk niya, baka tapos hindi rin maayos ang filing niya, baka hindi magiging effective yung audit natin. Baka kailangan talaga mag-send tayo ng confirmation, baka kailangan magkaroon ng physical inspection. Let's say sa fixed assets, marami siyang fixed assets, and yet hindi siya nakikita natin sa libro na parang ang gulo-gulo ng recording niya. Baka dapat mag-add tayo ng physical inspection instead na puro records lang ang tinitingnan natin. Things like that. So, yung mga things na ganun kasi, those factors kasi, yung need for physical inspection ng yung fixed assets count, or yung anong type ng substantive procedures ang gagawin, these are all determined during the planning phase pa lang ng audit. So, as I said, kung hindi effective yung planning mo, kung hindi maayos yung planning activities mo, most likely, or there is a great chance, there is a high probability na yung mga substantive procedures din natin will not be very effective. Or at the very least, siguro hindi efficient. Kasi baka mamaya ang dami nating ginagawang procedures, and yet, hindi naman pala kailangan lahat. Or, meron pala tayong kailangan gawing procedures, hindi natin ginagawa. So, yun yung answer to that question, what effective substantive procedures on other assets, kung ano yung mga effective procedures or substantive procedures on other assets. It all depends sa risk assessment process na gagawin ng team during the planning phase. So, all substantive procedures that can address the risk identified during the planning phase would be the effective substantive procedures to be performed pagdating na sa fieldwork. Another question earlier was examples of prepaid expenses. I think I have given those already. So, prepaid expenses. So, anything na binayaran mo in advance, that can be considered a prepaid expense.